Hey everybody, Spartan here from SpartanTrading.com. I wanted to talk to you guys a little bit about some basics in this video, fundamental basics. I want to talk about finding value or looking for value in companies that have, maybe sold off. This is a interesting time where we got a lot of companies in the market that have been hit hard from the recent sell-off. I'm not saying the sell-off is done by any means, but I am saying that it is a good idea to get a good sense of what to be looking for in terms of finding value, maybe understanding some more of the basics on the fundamental side. Obviously, as you dive in more and more, there's a lot of free resources out there that you can look up. Just Google, for the most part, and you can do some good due diligence on companies and in terms of liabilities, debt, etc., etc. Look at the actual the recent earnings, last earnings, and get a good scope of what that company looks like from a standing compared to their peers in an industry. But it is a good idea to start looking at these fundamentals or get a good understanding of them as these opportunities start to arise in the near future, which they will. When we invest into something, we're not looking to treat it as a trade. We're not looking to use the technicals first and foremost to make our decisions. We're looking at the fundamentals. We're looking at the company itself and what goes behind that. So let's take a look at some of the stuff that I like to use, just some basics, and we can go through some examples as well, and I can show you really quickly where I go to start the process of looking at the fundamentals. But finding value, there's a couple different things that I want to look at in terms of parameters when we run things through a screener. First and foremost, I look at the market cap. When you're looking for value, you probably want to be looking at bigger companies, good companies, companies that have had their foot in the door for a while. They have created a brand for themselves, etc. So market cap, I tend to look at the bigger market cap companies. We could say mid to big cap companies. That's primarily where you want to be putting your money if you're going to be investing. You don't want to be taking or putting your money into companies that aren't essentially generating any sort of return. So big companies, we want some sort of PE ratio, so we want them to actually be earning money, and we can talk about PE ratio a little bit more when we go through the screener. Debt to equity, we got to consider this. What's the debt to equity ratio? If the market or the economy is in trouble, how long can these guys survive for? What's the burn rate? How much debt do these guys have? What are the short-term liabilities? What are the long-term liabilities? Are these guys going to be able to cover the payments in the short term? Are they going to be able to cover the longer-term liabilities as well? That's always the question. Free cash flow, when we look at investing, free cash flow is very important. We want a company with good free cash flow so they can continue to use that money to reinvest in the company, R&D, expand, whatever. So free cash flow is something we want to consider as well. Last but not least, in terms of these parameters, we want to look at how these stand against their peers. So you're going to see, it doesn't make sense to compare, let's say debt to equity ratios from one industry to another industry, because if we look at, let's say a company like a, mortgage investment companies, they're going to have large debt to equity ratios, a lot of long-term liabilities, large, because, that's just the business that they're in compared to, maybe someone who has a more, quick or fluid type of, products that they sell that, basically in and out the door. It doesn't make sense to compare those two types of companies to each other, but it does make sense to compare them to the peers. And what we want to do is find the best companies within a market segment. So we will look at these ratios. There's a couple other ones we want to consider as well. Book value per share. These are just basically looking at what the company is worth with all their assets, etc. Cash value per share, how much cash they have per share, which is obviously important as well. We want to look at some technicals. And the reason why I say this is we got to figure out, if a company sold off quite a bit and it looks extended to the downside, that may look like a better opportunity based off of how much of a bounce that company could potentially have to a certain retracement level compared to one of its peers. So we want to look at the technicals, we want to look at the scope of the move. So let's take a look at, real quickly, a place where we can go to just look at this stuff. So we can go to FinViz, which is one of the best free screeners out there. I don't think there's really a screener that I would like to use more than this. Go to the screener and you can basically set up these parameters within here. Let's just quickly set up a quick little screen. So let's look for large market cap companies over 10 billion. Doesn't matter what the industry is. We'll just bring up a whole bunch. We'll kind of start it from the 50,000 foot view, going into more before we narrow it down. Let's go to PE ratio. So we do want a PE ratio. We want it to be a profitable company. Price to cash, we can leave this as it is right now. Debt to equity, same thing. If we're not looking at a particular industry, then it doesn't really make sense to narrow it down just yet. We want to make sure that we're figuring out a whole bunch of companies that we can start looking at and then break it down into industry to industry. So profitable, free cash flow, same thing. We got to make sure that we've breaking it down a little bit more. In terms of the technicals, a lot of companies have sold off. What should we look for? Well, let's look for companies that are trading near their 52-week lows, or maybe a certain percentage above them. So let's see, 15% or more above their 52-week lows. I think that's a good way to narrow it down. Sure. In terms of moving averages, you can add that stuff in as well. But this is just a quick little way to get a whole bunch of different snapshots of companies that are in different sectors that we could potentially look at maybe finding some sort of value. So this is the stuff that I look at, guys. Very basic. If you want to look at more in-depth information on these parameters, I suggest you just Google it, dive in, read a bunch of stuff. There's a lot of information on Investopedia that you can go through and sift through that tells you what these ratios means, how they work or compare to each other, and what's more significant than the other. Really good idea to start familiarizing yourself with this. When we do get market sell-offs, there's obviously opportunity. So if you are looking to maybe generate and invest long term, then this is basically the time to start looking and have certain companies on your radar that if they do get cheap enough, it would make sense for you to start maybe dollar cost averaging buying that equity. So that's it, guys. Just want to give you a quick little insight into that. If you guys have any questions, you can go to SpartanTrading.com. Feel free to hit me up there or send us an email, Spartan@SpartanTrading.com. Happy to help. Thanks, guys, for watching, and I'll talk to you soon.